Welcome to ForexTV.com. It's Wednesday, February 13th. I'm Remy Hookey for your New York Forex Market Buzz. In afternoon trade as of 1 p.m. Eastern Time, Euro-dollar is at 1.4575. Sterling is trading at the 1.9620 level, while dollar-yen is at 1.0814. In today's U.S. data releases, the Commerce Department reported that retail sales rose 0.3% in January. The figure came in better than expected, which boosted U.S. equities across the board. The headline number was higher, but figures for November and December were downwardly revised. Meanwhile, business inventories increased 0.6%. Ex-autos inventories rose 0.9%. Also, the increase in the ex-auto retail figure may point to a rise in inventory buildup for January. Joining me this afternoon is Greg Michalowski, Vice President of Trading and Liquidity at FXDD. Good afternoon, Greg.
Good afternoon, Remy.
Thanks for joining us today.
Thank you for having me.
Well, we've been seeing a fairly upbeat market sentiment today on the heels of the headline retail sales figure. We also saw dollar-yen break above 108 to touch 108.36, and that is the highest level in a month. But meanwhile, risk aversion has reared its head over in the bond market. But do you expect to see a new range for dollar-yen?
Well, yeah, the dollar-yen has been in a range for quite some time. Well, actually, since around the January the 14th level, so about a month. And the top level has been the 107.89 area. That was a low going back, I think, into December, and also topped the upside here in January and early February. So when the market was able to get through the 107.89 level, it was able to, some stops were hit and move higher. So now it went up on the stronger than expected retail sales, as you said, but that number is a little bit squirrely, I guess. There's some. A lot of it was in autos, and unit auto sales were down on the month. So it's a little bit skeptical, the figure in my mind, but nevertheless was enough to prop up the dollar, especially against the dollar yen, and also give a little boost to the stock market, which always helps out dollar yen as well. So let's not discount that fact, and we are above the 107.89 level. Traders will be watching that level on the downside. If we can put some room in between and move, continue to march higher, we may go up and test the 109.5 and 109.5 level over the near term.
Well, Greg, now that you've covered dollar-yen for us, let's move on to the euro. We saw a decline in Eurozone industrial output, but we haven't seen any major moves in the pair today. But looking ahead, do you expect to see upside for the greenback against the euro?
If you look at the chart in the euro today, off the retail sales, we came down and we tested a trend line that's been forming since February 7th area, and on the hourly chart, and we're sort of in a channel over that time period. And a key level for me for the euro dollar is a 145.78 level. If we can move above that, I think we have a chance to go and test around the 146.2025 level. Right now, the market is testing that area. It's not showing a lot of momentum through it, but as the afternoon goes on, if we're able to move through there with some more short covering, I think there's a good chance that we can head up to the 146.25 area, where there's the top of the channel resistance, and also a longer-term moving average on the hourly chart that comes in there.
Okay, let's shift our focus right now over to the UK currency. Following the BOE inflation report which came out this morning, sterling was not able to hold on to gains that it reached after today's report. But Greg, where do you see topside resistance coming in for sterling against the U.S. dollar?
Well, the easy level to look at is the highs for today. That certainly would be the first level, 196.55. If we're able to get through there, the 50% retracement level of the move down since the January 30th high to the low comes in at 196.72. So I would expect a move above the high for today goes and tests that level. So we are at a lot of resistance up at this area in the sterling versus the dollar, and it might need some help as far as something like the sterling yen moving up through resistance at I see at 212.48. Some of the crosses to sort of kick in and give a bid to the sterling going forward. As you suggested or indicated, the inflation report from the Bank of England did paint a picture of inflation going up toward the top end of their target range. They also anticipate 1 to 2 cuts this year, which is less than what the market is anticipating, with some going as high as 100 basis points of more cuts this year. So if that is the case, inflation does rise, and it causes the Bank of England not to lower rates, and somehow growth remains strong, and or doesn't remain but gets strong over there, then we're going to see the currency get stronger. But there's a lot of ifs in there, as are there a lot of ifs in a lot of different countries right now, with all the headwinds from the housing market in the U.S. and the effects of a slower U.S. growth on other countries overseas. So the best way to play it is to take what the market gives you. If it's going to trend a little bit higher and go to certain resistance levels, it's probably wise to take some profit at those levels and see what happens after it. You always have a chance to get back in if it does break higher. So I would look for the 196.72 area to sort of hold the upside in the sterling in the short term.
Okay, Greg, before we wrap it up, if we could take a look at the upcoming session. Tomorrow in the U.S., we have Bernanke testifying before the Senate Banking Committee. And also overnight, we'll be getting employment data out from Australia. Aussie against the dollar has not taken out recent highs. So if we could take a look at the Australian currency against the U.S. dollar, and also whether you think the Aussie versus the yen is still a good trade.
Right. As you mentioned, they do have their unemployment figures coming out tonight, and the expectations of them is to add another 15,000 jobs. I think that's like the 15th month in a row that they've added jobs, and really there's been very few months over the last 4 or 5 years that they've had any decline in jobs added. So the economy is still very strong over there, and of course we're seeing them raise rates, with the last one coming last week. Since that time, immediately after they raised the rates, the Aussie dollar, instead of getting stronger, actually pulled back a little, and it went back up and tested the highs right before the rate announcement, pulled back again today. So it suggests to me that the currency is still wrestling with strong growth, but maybe anticipating that there's a chance that the growth may slow as a result of higher rates, perhaps the U.S. problems affecting overseas, especially in the Asian countries, which have benefited the currency and benefited the country's economy for quite some time now. In regard to I think key levels for the Aussie is we got to take out the highs right before that occurred before the employment number, and go from there. But if I were to as far as the Aussie yen goes, I think that has some decent support at the 96.25 level. We have a moving average that comes in there off the hourly chart. We also have a trend line that comes in at precisely that level. So it's if you have two technical indicators that are sitting there holding up, providing a support level, I definitely are looking to buy against that level. And the worst that can happen is it goes below it and you take the trade off. But right now that looks positive for the Aussie yen. I would be a buyer against a stop below the 96.25 level. and if you get a move up, you have the benefit of earning carry profits, as well as the capital gains on the currency pair going up, just as a result of the stronger economy in Australia.
Okay, Greg, as always, thank you very much for your insight and analysis into the Forex marketplace.
Thank you for having me.
This has been your Forex Market Buzz with Greg Michalowski, Vice President of Trading and Liquidity at FXDD. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.